part 2 of market structure. I don't know where this surge of energy just come from. Well, actually, I do know where it's come from, but anyway, we ain't got time to be explaining. We're hopping into part 2 of market structure. Now, the previous market structure video, I just showed you guys the visual representation. In this video, I'm going to be showing you the visual representation, but on the charts itself. So yeah, I'll see you guys on the charts. All right, we're on the charts. So right now we're on US 30. I don't want to look at US 30. I want to look at USD JPY. Let's look at USD JPY, my people. Yeah. And I'm going to clear all drawings. So if you watch my time frame videos and the importance of time frames, you'll understand that the time frame you are using is very, very important in terms of understanding the charts and understanding price action and technical analysis, you know. But for the purpose of this video, to keep it very simple, I'm going to be doing my analysis on the 1 hour time frame, you know, because it's right in the middle, you know. It's not too high, it's not too low. I feel like we can get a lot of good examples on this time frame. So market structure. So I'm going to go to a random point in time, scroll the way back and stop, and I'm going to show you guys on the chart. So right here, right now, market structure. So as you guys can see on the charts, we have price push down and create a low, and then price pushes up and creates a lower high. I wouldn't really class this as a lower high, pretty much because it is so close to this previous high right there, as you guys can see. So we have a high here, and then we have a lower low here. Price pushes up, pushes down to that low, pushes higher, pushes down. So from this right here, sorry about that, from this right here, we can easily identify that this is a period of consolidation. We are on the 1 hour time frame, and if I look at the date, it says Monday the 27th of January 2025, and the period of consolidation ends when we actually break out of this consolidation range, which is from this low that we created right here. And if you guys remember in the previous video, I did state that consolidation is when we are making equal highs and equal lows, and we are in a range. If I grab my measuring tool, or my better measuring tool, I can show you guys how big this range actually is. So we can grab this measure price range and do that. So from the number up here, I can see it's about 242 pips. I can round it up to about 250. If I extend it, yes, it is 250. So we have a range of consolidation of 250 pips. We then break out of the range. But just before we break out, notice what we do, guys. We push higher, again, equal to that high. Push lower, pretty much equal to that low. We then create a lower low that is lower than this low and lower high, that is lower than this high and lower than that high. So we have a lower high right here. And after that lower high, price pushes all the way down to create a lower low. Now price is in a downtrend because we've got lower highs, lower low, lower high, equal low, a small period of consolidation before again continuing the downtrend. Again, sorry about that. That's just something that pops up when I'm, you know, in my technical analysis phase and I'm just doing my work. So yeah, so right now price is in a downtrend, as you guys can clearly see, as we are making lower lows, lower highs, equal low, period of consolidation, lower low again, lower high, equal low, period of consolidation again. Now this is the 1 hour time frame that I am on. And then price. After this period of consolidation, we reset. Again, during this period of consolidation, just look at structure, guys. Because we've got structure on a bigger scale, as you guys can see, lower low, lower high, lower low, lower high. That's structure on a bigger scale. But look at structure on a smaller scale. Like inside of this period of consolidation, we make a higher high right here. We then make a higher low right here. That needs to stop popping up. I don't like it. We make another higher high right here. We then make another higher low right here. We then make another higher high right here. So this guys just shows you how precise price action really is. Now, why price did that, I cannot tell you why. But in this larger consolidation range, first we have lower lows and lower highs, and then we switch it into higher highs and higher lows. But on the bigger scale, again, time frames, you guys can understand we are in a downtrend. And then in this period right here, we are in a range-bound market of consolidation. But in this consolidation, we've got higher highs and higher lows. So again, when I talked about time frames in the previous video, I did state how the time frame you are using dictates the type of trader you are. This is the 1 hour time frame. This is Thursday. This last high was made on Monday. So that is, Thursday, the start of Thursday the 27th, all the way to Monday the 3rd. So that's about a week. Friday, Thursday, Friday. So it would have been Thursday, Friday, and then Monday. No, not a week. The end of a week starting into the new week. So that's about 3 days in total. We make that high in on Monday, and then we start the push down. Now, in those 3 days, if you're an intraday trader and I said you get in and out of the market within that same day or even within that same hour, in this period of higher highs and higher lows, you could catch a buy trade. It's easy. You guys can catch a buy trade in this period of consolidation, a larger period of a downtrend, consolidation, but you guys can potentially catch a buy trade right here. Ride this all the way up and get out. Depending on the type of trader you are, like I said, time frames is important. But this is showing you guys how precise structure is and how precise the markets are. So after this higher high, we then fail and we break through this higher low, which is the floor. We break through and we create a lower low. Before I start drawing again, let's clean the charts. So we have a small period of higher highs and higher lows, which is an uptrend. We put a high in at the top. We then put a low in right here, which is a lower low. And then we put a lower high in. And then we put an equal low, another lower high, and then burst through that low, continuing this downtrend with lower low, lower high, equal low, lower high, lower low, lower high. So this is me showing you guys structure on the charts. Look at the candlesticks as well. Pay attention to the candlesticks. Remember when I did state how on these swing highs, that's when traders will look to get their entries. If you look at the candlesticks on these swing highs, just look at the pattern. So we have up here, we have an evening star. Again, we didn't break this bull candle, but on the next candle we did. So that's an evening star pattern right there. Sorry, not zone, levels. Then on this lower low, we push up, price starts consolidating, push down a bit, boom, and then boom, engulfment. So this right here is an engulfment. We then push low with an equal low, price starts consolidating again, and then boom, pushes lower. So I want you guys to kind of start integrating everything that I've talked about in this beginner course, you know, from time frames, from candlesticks, from price, from the date. Literally, I know you are just a beginner, but start integrating everything, because when you're trading, you're not just going to be focusing on one thing. You're not just going to be focusing on structure, like, okay, this is a lower high, so I'm going to sell here. No, you have to look at the price. You have to look at the candlesticks. You have to look at the pattern that's involved. Start integrating everything. But if we're purely just looking at structure, you guys can see lower low, lower high, equal low, lower high, lower low, lower high. And then we start moving into consolidation, right? Consolidation, coil, coil, coil. We're still moving lower, but it's consolidating and coiling. And then boom, we put this lower high in, or an equal high in, right there. And then from there, what happens? Price pushes lower, higher, consolidate, higher, higher low. So you guys can see how the market moves. We go from lower lows and lower highs to consolidation, to then putting in this high equal to that high, putting in a higher low, and then going into an uptrend. So guys, we have all the phases of the market right here. We have all the market conditions. Just in this small segment right here, we have all the market conditions. Let me delete everything. We have lower lows and lower highs. We have a period of consolidation. This is getting a little bit messy. And then we have higher highs and higher lows, for you guys to see that all the market conditions is in this period right here, for you guys to see. So yeah, as your homework, use the charts. Again, train your eyes as much as you can, and go through the charts and literally just identify where's the period of consolidation. Mark the highs. You see equal highs and equal lows. Okay, cool. Where's the uptrend? I can see a higher high, I can see a higher low. Start marking them out, and just train yourself to be able to identify these conditions. I'm currently get a call right now, but I'm going to end it. Thank you guys, and I'll speak to you later.